What's up, what's up? Replayers, what's up? Please share, please heart it up, guys. What's up, guys? So, happy Monday. Getting things started with some great movement down south in the Euro USD cross. Fab, what's up? Thank you for the hearts, guys. That lets me know that the broadcast is not sticking and that technology is working as it should be. Kerr, what's up? Guys, if you could please share, invite followers, really appreciate it. So listen, Friday I left off with you guys. You guys can catch me, catch.me/FITBUSINESSMAN. We left off with a short trade in the euro that is working wonderfully. We're up about 75 pips right now. We went short at 13.18. I showed you guys that. Now here's where we are, guys. The system is working perfectly. We went short 13.18, right about here, and you can see this is the daily chart. It's working wonderfully. Now here's what I expect going forward, guys. I expect this trend to continue a little bit. Okay, when it comes to systems trading, the systems determine when the proper alignments come into play for a reversal. So it's impossible to really call a reversal, but you have to be aware of where exactly the resistance would be for this situation to continue moving downward. Coral, what's up? How are you? So where do we have resistance? You can see that if we go back, there's a lot of price action in this area. Okay? And the most recent price action, which had a ceiling here and a floor here, we're going to start seeing resistance. This is about the 1217 level. I don't know if you guys can see. Not zooming in well. But anyways, this is about the 1217 level in the Euro USD cross. So if we are going to continue moving south in this position, in this short position, expect there to be some flooring occurring around this area. Now, why is that good and why is that bad? That's good because if you're going to be taking, if you were in the short position from the position I called on Friday at 13.18, then you need to realize that this could be the position where traders are going to come in and start buying. Jason, how are you? So this would be an area where traders are going to step in, they're going to start buying. However, the sellers could overwhelm the floor that is going to be put in here, and this could continue downward. Okay? Like I said, this volatility that was created here where the system said to go long, what is a pip? A pip is basically the amount or measurement, all right, for a currency pair that is considered to be worth $1, basically. All right? So, or a fraction of $1. It's different for every single currency pair. All right? So, basically, the pip action for one pair is not going to equal price action across different currencies. All right? But basically, what you're going to see is that each currency has movement that occurs and movement that is in relation to the Federal Reserve creating a large amount of volatility. And you can see right here and right here, these are both instances where central banks changed their positions and they created very large amounts of volatility. And these are the instances that we're attempting to profit from using a system. I'm a system trader. I code various systems for various markets, Forex, futures, equities. This particular system is for Forex markets. And you can see that we have taken short and long positions in a very timely fashion at certain points. And these are meant to make us profitable in the long term. We're attempting to capture the volatility. Okay, we're attempting to capture the volatility in the correct direction and profit from it and grow our accounts is the basic way we're looking at this. Anyways, guys, I wanted to show you guys this price action because Richard was with us on Friday when I made the short call. We made it at 13.18 in the Euro USD cross, and that's continuing right now. Current price is 12.44. Pal, how are you? And like I said, I expect this to continue moving downward. We have some flooring here at the about the 12.15 level. Actually, let me see what the high was. 12.16 level here, you can expect a little bit of flooring to occur. The question is, will it continue below that point? Now, how do you play this as a smart player? You play this by, if the move continues downward, in this position, a lot of traders are going to start taking profits from their short, okay? That is automatically going to cause a bounce up, because when the traders take their gains, that's still considered buying, okay? They have to buy back their short positions. They're buying back. So if they're short the euro, they're going to start buying more euro, and that's going to cause the price to bump up because demand is going to elevate, and a higher demand will cause a higher price, right? So this is basic supply and demand economics here. There is nothing crazy in terms of mathematics, except for the fact that what happens to probability as we enter this area? Your probabilities of going long increase. Your probabilities of gain from going long increase. Your probabilities of going short and having a gain decrease. So you have to start thinking about this in logical terms, and essentially that's what happens when price enters areas of support and resistance, is that you have a change in supply-demand economics, and these could be areas where volatility increases, especially against the trend, and right now the trend is downward. Kurt, no problem. Guys, if you enjoy this information, the best handshake you can give me is just by sharing with your followers, even if it's 1 or 2 people, and I appreciate the hearts as well, because the hearts let me know that this is not sticking and that you guys are seeing this pretty much real time. What is the biggest challenge to predict the next ideal time to invest? Good question. This is Jason. This is the daily chart for Euro USD. Daily chart for Euro USD. I don't know why you guys can't see. I don't know if you can see, but right here it says daily chart. We are using the Thinkorswim platform, by the way. This is the Thinkorswim trading platform. No problem. The biggest challenge in determining any investment is, first of all, determining your risk-reward ratio. It's the same for any type of investment. Yes, I do like Thinkorswim. I like it a lot. Any type of investment has the same challenge. It's what are you willing to risk and what is the reward? And you have to determine that ratio, okay? That is dependent on your own specific goals, okay? So if you determine that you're willing to take a risk for a financial gain, everybody else is determining the same thing, and different players in different markets have different amounts of information, so they know whether it's a good bet or not, right? So you have to approach this. If you are a professional gambler, you know, and you come up with a certain hand in poker, you know that there are X amount of hands that can beat your hand, right? So this is how professional poker players play it. It's a game of probability. If you come up with a royal flush, well, you know that you have a certain probability of winning, and it's extremely high, right? So that's how you have to play the game of investment, whether it's Forex or real estate or education. If you're going to be investing in your education, college, what is the risk and what is the reward? And let me tell you, right now there is a greater risk in investing in college than there is reward. And so at a certain point, supply and demand is going to switch over. There will be much less demand for college education, much more demand for online types of education, and you can apply economic principles to any investment. Any investment. Now, there are basic economic principles, and then there are principles that are within the market itself, which are very specific, and that's where you get your edge, is if you combine your economic edge, right, from basic economic principles, supply and demand, you combine that with specific principles to a given market. Now, I am specifically a Euro USD trader when it comes to the currency markets. That is the cross that I enjoy trading. It has a great amount of volatility, and for that reason, I specifically watch that market. Now, other people watch other currency pairs. Some people watch all currency pairs, but the fact of the matter is that you have to decide for yourself where you think the best risk and reward ratio is. But here's the other part. You also determine how you measure that. So you can measure in terms of pure probability. Okay? So in terms of pure probability, this price action is moving downward. The next likely move, if I have to flip a coin, is likely to be downward, right? That is basic probability. The only thing that is going to disturb that downward move is a lot of action going in the opposite direction, and it takes a lot of inertia to overcome that. Do you base trades on fundamental news as well? No, not with currency pairs. I do not. And let me tell you why. Because it's impossible to really have fundamentals in currency pairs, because the Fed can come in and make a decision that completely changes fundamentals, and that can happen without a notice, and it can happen in a matter of minutes. So there really is I would say a detriment to being a long-term investor in currency pairs. Currency pair trading has advantages when it comes to very quick, short time intervals. Okay, and so that's why banks and large institutions are basing their trades based upon very short time intervals, sometimes overnight, but most of the banks are in intraday trading when it comes to the Forex markets, and it's extremely hard to predict where central banks are going to go with their interest rates. So long-term traders, the longer out you try to predict, the less chance you have of being correct, right? There's a lot of things that can happen. And so that is again comes down to basic probability. If I tried to predict the next minute, I would venture to say the next minute the euro is definitely going to be down. However, let's say the next hour there were to be, something traumatic. Right, short intervals for predicting the movement. Now, the longer out I try to predict, the less chance I have of getting right, because there's too many other variables that come into play when it comes to long-term prediction. And this is why most of the traders in the Forex market, in the currency market, they do very short time interval trading, okay? And it's a lot of trading based on probability. And so the first thing that you have to understand if you want to enter into the markets is that it is controlled by math, okay? This is a math equation of the highest scale with the smartest players, okay? The people that are in this market are MIT graduates, Harvard graduates, or mathematicians basically that were in the top of their class since high school, okay? So these are the players. You got to recognize the playing field, okay? When you go play football, you can look at those players and determine whether or not they are a viable competition. The thing with the Forex markets or any market is you do not see the players, okay? You cannot wear intellect on your sleeve, so you don't know exactly who the players are, especially beginners. They don't realize the players they are against. And let me tell you, these are smart individuals. We're not talking about millions on the line. We're talking about trillions on the line. Forex markets, there's about $4 trillion traded every single day across the world, okay? $4 trillion in trades get executed in New York alone every single day in the foreign exchange markets. So you think about how big that market is. We're not talking about billions, we're talking about trillions here. Okay? These are not stupid individuals. These are very intelligent people that you're trading against. Yes, I do use trend lines, waves, and indicators and basically, I draw them sometimes, but I wanted to give you guys a clean chart right here because I am illustrating the system trades that are occurring in the new trading system that I'm working on. I've been testing it, as you can see, for quite a while. It's been extremely good in terms of the calls that it's making, and so we're just going to continue to follow along, but feel free to ask questions if you would like to see anything in terms of trend lines, waves, etc. The wave trading, I will be honest, I don't really see much promise in terms of the wave trading when it comes to these Federal Reserve announcements. There's no way that the waves can predict that. But when will it be released? Not quite sure if I'm releasing it to the public, but if a lot of people show interest, I may actually do that. And I will see exactly how long I can follow along here. I'm obviously not going to release anything that does not work. So right now we're just continuing to monitor. In terms of, can you just repost that? I caught the last amount of it. It faded out a little too quick. I wish sometimes Periscope didn't fade out so quick. How long have I been trading? I've been trading 8 years. And the first, I would say 3 years of that were completely in a paper accounts, testing strategy. And from there, I began doing internships at hedge funds and various other finance institutions. And now I basically trade for myself in addition to my technology startup. I have a technology startup in the weight loss industry. But the aspect of money management has grown on me every single day. I check the markets every single day. I am exposing myself to new technology and strategies. Hello. If you're new to the room, my name is Jay Salvati, and I am a Forex trader. We're covering the Euro USD cross here on a short position. Private classes available. I don't give private classes as of right now. Again, that would be something. I'm basically going to hop on Periscope and give you guys some trades for free, because why not? Hey guys, look at this. Even as we're talking here, we're going down 1236. It's continuing down to that level. Remember I told you it's gonna start seeking some resistance right around the 1215, 1216 level. Does tracking your competitors come into your equation? Do you chart competitors? No, and let me tell you why. Because it's impossible to track competitors in Forex because we already know who they are. They're large banks and institutions. So the only people you have to track are basically the banks. They're the ones with the largest amount of money, and basically, when it comes to the money moving around, the larger institutions are the ones that are going to determine exactly what the pricing is. It's important to understand, guys, these large candles, these are reactions to the Federal Reserve announcements. And that's the reaction is that this is a bank, all right, the bank of the world, okay? So basically a bunch of banks around the world changing their positions in currency markets to reflect what the Fed announces, okay? And that's why you see here the price movement is basically sideways. This is a period of indecision, okay? Not this candle here, but these two candles, these are periods of indecision in where banks are trying to align themselves for a possible shock that the Federal Reserve is going to make. The Federal Reserve makes the statement, and you can see that my system actually made the prediction of the Federal Reserve before it even happened. Now, how is that possible? Well, it's possible because the computer systems are taking into account multiple forms of data, okay? And if price movement starts moving in a certain direction, that's a hat tip to the movement that's going to occur in the future, okay? So this prediction was not made because I'm predicting the future. The prediction is made by the system because certain elements of data are pointing to a directional move immediately prior to the Federal Reserve announcement. And what does that mean? That means that there was leaking of data from the Federal Reserve announcement before it actually occurred. Now, yes, that is completely illegal. There's not supposed to be leaking of a Federal Reserve announcement, but what you can see is that in various instances, computers can tell if people are leaking information about what the Federal Reserve is going to say prior to the actual announcement. So, what does that say? It says that computers kick ass and that the human mind cannot fathom the amount of calculations that is being done by the computer system, okay? The computer system will outcompete the human mind when it comes to logic every single time. And so these are turns based upon data that the computer system is interpreting and spitting out a high probability trade for aligning with the announcement that is about to occur. So that just goes to show you that systems trading, if you are not utilizing any type of algorithm or systems trading and you expect to beat the Forex market, it is not possible. It is just not possible to do without using computers, guys. And that is likely to be the case for most of the jobs in the future. There is a global shift coming when it comes to technology. So, enough of that. We're still making moves down. What program is this? The platform is Thinkorswim, and the program is my own proprietary program that I coded that is being used inside of the Thinkorswim platform. Yes, the computer is seeing the anomaly before humans can. Essentially, the computer is not necessarily predicting. It's not predicting what's going to occur based on some, vast insight into the future. What it's doing is it's taking available data from both the history, the history of things that have happened, and the current data, and it's aligning a position that suggests that a move will occur in a certain direction. How can you get access to that? Well, the Thinkorswim platform, that is free. You can get access to Thinkorswim or any other brokerage platform. They actually make the software you can download for free. You set up an account with the broker. My algorithm is not for use by anybody else. It's something that I'm using right now and testing. But like I said, if there is going to be a lot of interest in it, I may decide to release it to the public in terms of some way. Thinkorswim, yes, Thinkorswim is a platform, and they got acquired by TD Ameritrade. They got acquired by TD Ameritrade, and so TD Ameritrade is actually the broker, and of course TD Bank is the parent company of TD Ameritrade. So it's a large bank, but they have the brokerage arm of the bank, so to speak. Check it out, guys. Proceed as if success is inevitable. And that is what you have to do every single day. Proceed, proceed, proceed. Anyways, guys, I'm going to hop off. I wanted to give you guys that trade, let you know when I called this trade, this short position on Friday, which is a very risky thing to do. You don't know what can happen over the weekend, but as I said, just curious. I will let you know it's quite an amount, but to be honest, it's in a proprietary account that is not my personal account. I trade account, an account that is I guess you would say, a culmination, a fund of other people's money, so I can't release that information. But anyways, fist bump, thumbs up. Guys, I hope you enjoyed the trade. Money does not sleep. Is that you, money don't sleep? Or is that someone that's using that phrase? I have a friend, Money Don't Sleep, who pops in the room every once in a while. I wanted to see if he's using a different username. But yeah, Friday we called that short position. Over the weekend, very risky. Even stops, guys, stops. The price move can actually go past your stop. So calling positions over the weekend, if you are a newbie trader, not recommended, okay? You never know if a crazy news event can happen. Barack Obama lands in Cuba. There's a lot of things in risk management that come into play. If you're a newbie trader, you have to check your risk management. Never put too much risk on War Plan 2.0. Money Don't Sleep is in the house. I knew it was you. You have to check your risk management, guys. So when I placed that trade over the weekend on Friday, I did it knowing that, yes, risk is going to be elevated over the weekend, as it is every single weekend. You can't change your position when the markets are not open. The great thing about Forex is that the markets are open more so than any other market. There is always some type of currency market open starting Sunday night, okay? So if there were shock that were going to happen from Friday, Sunday night about 5 p.m. Eastern time would be where it would show, and I could adjust my position before Monday. So you would not have to wait for Monday for that to occur. However, the risk is always there. I don't recommend for any newbie trader that you take positions over a weekend, because obviously that increases your risk. If you do take a position, you want to really cut it down, make sure you're not exposing too much of your portfolio to that position. Does just as much as NFP, fill me in, not sure what NFP is. Guys, this position is still moving south. We're at 1236 right now. Of course, we entered at 1318. Who knows? We might get 100 pips out of this position in technically a 24-hour period, which is, of course, a kick-ass play, just to be honest. Anybody who can take 100 pips out of the market has a game, guys. Now, I want to say one more thing, in that there's a difference between having a game that you can have a positive outcome from, and being a trader that is trading strictly on risk and reward. Now, what does that mean? Well, first of all, you need to know and determine if you have what's called positive expectation to your game, right? Can you share a great deal you had? Not sure what you mean by deal. Go into deeper about that while I explain what I'm about to say. Trading in any capacity, you need to have what's called positive expectation, meaning that there is a point where you could actually win. Non-farm pay. Oh, okay. Yeah, I'm familiar with non-farm payrolls. Well, it's fair to say that any type of news is going to affect markets, especially exchange markets. But non-farm payrolls is going to affect mostly U.S. markets, and currencies, of course, are global. So the risk would be that for some reason there are international funds that are heavily aligned in some type of U.S. investment, and then of course if they had to change their position, that would be where the risk is prevented. But for the most, or where the risk is presented. But for the most part, international currency markets are much too large for some type of news to come out of one area for it to be affected, unless it, of course, is the no problem. Unless, of course, it's the Federal Reserve. The interest rates, you got to understand that the currency markets are largely determined based on carry trades and a lot of borrowing of money. Okay, these banks are borrowing billions, if not trillions, of dollars. Okay, now that might not seem like a big deal when someone makes a 0.25% change in interest rate. If you have a couple $1,000, 0.25% is not a lot. If you're in debt by a few $1,000s, if you're in debt by six figures, 0.25% all of a sudden becomes apparent. If you're in debt by $1 million, I know, Telegram, you keep telling me about it. I just got too much to do right now, dude. I'm gonna get on it soon though. I'll check it out soon. If you have millions, tens of millions, billions of dollars in debt, and now all of a sudden there's a 0.25% move, 25 basis point move in what a bank and what the central banks do, now you're talking about serious money, okay? Now you're talking about serious money. If you are indebted by a large amount of money, those interest rate changes will cause an entire bank to shift money immediately, okay? So they're going to shift money immediately depending on that interest rate change, and that's how you have to start thinking. Non-farm payrolls, there's a lot of arguments that those statistics are gamed. Obviously, right now we have more jobs occurring, but the fact of the matter is that even though the amount of jobs being created has been rising, they're very low-paying jobs, and the net effect of that job creation is not a lot. Traders that are in the know, especially big banks, they know this. They know how the so-called the Federal Reserve statistics can be changed to manipulate a certain thesis, so to speak. The Federal Reserve, one of their primary concerns is keeping the ability to create jobs in effect in a certain country, especially the U.S. So that is part of their dual mandate, is that they are going to try to create jobs. Unfortunately, not all jobs are created equal. If I give you a job at McDonald's, not that cool. If I give you a job as a managing director at a bulge bracket bank, very cool job. Obviously, one of them is going to pay for an entire family's needs, and the other is not. So not all job creation is created equal, and what you want to start looking at is net impact and net effect over the course of, say, a month by a change in non-farm payrolls or something like that. And the net effect internationally is not that much. Unfortunately, what does impact is those interest rate changes, because if you know, the debt that is being created when inflation occurs. See, this is something that I want you I want to leave you guys off with. The central banks are creating money. That's what they do. They print money. They're increasing money supply. And so what happens is that when you go into debt by any means, whether it's to buy your latest car or for a down payment on anything, okay, more money in the market means that as interest rates are changed, the impact to the population becomes greater. Okay, so these interest rate changes are not to be taken lightly, and that's why you see those extreme jumps in volatility. Let me just show you guys. Guys, these changes, okay, right here, okay, these jumps, this is all volatility created by central banks. These periods of indecision here, okay, this is what is normally supposed to happen. Okay, we're normally supposed to have fluctuation that looks random. When you see these jumps, these large bumps in volatility, okay, and then a large selling, which happens to occur down to this point, this is done by banks, guys. These are not retail traders. It's important to understand who your competition is. My competition is not you. My competition is the banks of the world, and you know what? If they are getting access to information and I can parse that information with a system as fast as they can, that is my leverage. That is my game right there. So anyways, guys, we're going to continue watching this trade. We're at 1239. I will see if I see any resistance coming up in the future. I'll hop on another Periscope. Guys, do me a favor. Please just invite people. Kerr, no problem. Please just invite people. What were those white lines? Those are the indications by my system of when to change positions. Okay. But we'll go over that in the future. Basically, right now, all you need to know is that my system is currently short. If you guys wanted to follow that trade, of course, Friday is when the trade started. I hopped on Friday. You guys are just going to hop on and see what the future trades that I spit out, or actually that the system spits out, occurs. You can hop on Periscope and follow along if you please. Okay, I'm not just going to tell you that you should take a position or you shouldn't, because I don't know your individual situation. But my system is killing it right now, so if you want to hop along, feel free. What do you mean in terms that you want to become an investor in my program, or that you want access to the program? I'm not quite sure what you mean in that capacity. But basically, the way it's going to work is this: if I see a high demand, then of course I'm a businessman. I may open up the opportunity for you to hop along on every single trade in the real time. Right now, it's going to be me hopping on Periscope and giving you guys free trades. All right. So the biggest thing I can say is please invite your followers. You're just going to swipe on iOS. You swipe to the right, invite followers, and then swipe up. Okay, I'll think about it. I definitely will. In terms of right now, I'm not looking for investors because, of course, I want to make sure that, basically what I'm doing right now is letting you guys follow along and see how I test the system. Of course, I'm testing it. Thanks, Kerr, for the invite. Appreciate that. I test things in real time, guys. You can do back testing, so-called historical testing. You could also do what they call forward walk testing. There's various different types of testing that you can do. But the fact of the matter is unless you're testing real time in a real account with real money, it's not quite the same. No problem, boy. Nastya, what's up? So, I hope you guys gained some great information out of this. If you missed the scope or any portion of the scope, just hop on the replay. You can see exactly where the trades were and what I called. Again, trade originally was taken on Friday after it was afternoon. I forgot exactly when I put out the scope, but it was Friday afternoon. And now here we are, Monday, 1:27 p.m. and we are up about 75 pips. We're up, but we have a little retracement right now occurring, and it may continue going on in the other direction. So guys, enjoy your day. I hope you guys get some great fruit from this. And if there's any way that I can help you, hop on Twitter. My handle is FITBUSINESSMAN on Twitter, on Snapchat, on Periscope, and those are going to be the main three that I use: Twitter, Snapchat, Periscope. But shout me out on Twitter if you have any specific questions. Twitter.com/FitBusinessman. Use the hashtag, just use the hashtag Forex, okay? Weed God, what up? Use the hashtag Forex, and I will get you back some type of reply. I'm always tracking my Twitter accounts. All right, guys? So enjoy your day, kick ass, be of the mentality that you can do whatever you want, reverse engineer it, make it happen, be logical, no emotion, kick ass. Money don't sleep. Steroids. I tell you what, man. Tell you what. We're kicking everybody's ass, even the people on steroids. Anyways, guys, just wanted to let you guys know how that situation was occurring with Friday's trade. So keep kicking ass, the boy. Money don't sleep. Hit me up on Twitter. Ask me some questions, dude. Ask me some questions. I will be sure to answer your questions on Twitter. Obviously, if I get any questions, I'm gonna probably answer it in a Periscope, because Periscope is my social network of choice as of now. Might have to start hopping on Snapchat a bit too. All right, guys, kick ass. I will see you guys on the next scope with an update. Ciao.